All right, welcome everyone to a very quick video. I'll be doing a market review using the CFO Swinger Watch that was sent out yesterday to all my subscribers and kind of show you how the newsletter works and how my subscribers use it as a leverage to their trading strategies. Now, the first thing I want to talk about, and I told my subscribers yesterday on their own private video and on my market summary review that I write, and how they kind of coincided together to give a big picture for them to be prepared for on Sunday night, um, is that on the weekly time frame here, I showed them that there is a very, very strong ascending support trend line that goes all the way back to the March 2020 lows. All right. And if I go back to the daily time frame, and what I told them yesterday is that if we break this rectangular green box here, this area, demand area, or area of support here, was that we will eventually flush all the way down and keep on going down until we hit a critical area of support around $422 or even slightly below 422. Now, I did say that it could take about 2 to 3 days, but the market is never 100%, and the market will do whatever it wants. And once it starts a new type of trend, it will quickly go into that new type of trend. And this new type of trend that I'm currently seeing is a downtrend. Now, I did say that we don't see an official signal for a downtrend, but if we break this ascending support trend line to the downside, that will be our official signal that the market is now turning bearish and we could be seeing a correction phase where the market will ultimately go down about 10%. Now, the reason why we bounced at the 422 level, and the reason why I said that we could possibly go down here and bounce, is that previously this was a huge area of resistance that was, barring the prices from entering new all-time highs here in this little tiny area. Now, today we actually bounced on top of it, making it into a new support. And also, in correlation to that, we also had a daily 50 SMA, which is my dark blue line here, and it used it as an area of support. And with those two different technical areas, the price decided to bounce on top of it and decided to end up pretty, it's not really bearish, but it did show us that buyers were indeed still present at this previous level of resistance and at the 50-day SMA. So if I look at the 2-hour time frame, and also if you guys are confused by this wick here, TradingView kind of tends to lie sometimes during initial I guess downturns and an increase in volatility. But what I noticed in the past that TradingView does get these glitches where it shows as if during the day that we somehow filled in this gap that we had overnight. But anyways, on a 2-hour time frame, all right. I love to use the 2-hour time frame. My subscribers absolutely, love to see my 2-hour time frames as well because I use it very effectively. And on this time frame here, you're able to see kind of the momentum of where the price is going. But what I told them yesterday was that if we don't see a bounce at 422, and if we see like a little tiny dead cat bounce, excuse me, we could potentially actually use the 422 level or even 423 level as a level of resistance, all right? And we can continue to go lower until we break this ascending level support, that weekly support level, that critical area of support, and start that bearish signal to the downside. Now, today, All right. So this is actually my thoughts for the rest of the week. So you guys might want to pay close attention here. So today we saw a lot of selling pressure as bears finally won this tug of war as we're going up to all-time high levels as they continued to try to push the price lower, but ultimately getting squeezed out, which is the reason why we kept on moving up higher. And that's the reason why we need to always follow the trend and not fight the trend. And so today, most of the day here, most part of the day, we saw a lot of bearish movement. The price kept on attempting to bounce, but we kept on getting dead cat bounces. But at the end of the day, near the end of the day here, we saw a big push by buyers, especially on the 2 hour time frame. And whenever we see the 200 SMA catching up on the 2 hour time frame, the 200 SMA tends to act as a very strong area of support. However, the conditions change, especially when we're at all-time high levels where the price can either continue to bounce up higher and higher and higher, or it can start breaking lower. And when it starts to break lower, the price has a very, very, very high velocity movement downward. And the 200 SMA support on the 2 hour time frame can be invalidated very, very quickly as the bearish traders start to push the price lower and lower and lower. But today, it acted as a strong area of support again. However, I do see a the volume. Okay, it's not the exact amount of volume that I wanted to see, but nevertheless, it's pretty significant. And we were able to trace back the losses that we had this morning and into the afternoon here, early afternoon, more than half here. As the lows today were around 421.90-ish, and we're able to close above $424, which is kind of what I wanted, but ideally I would have wanted around 425 in order to see a pushback upwards, and then we could potentially see a rejection at the first candlestick's highs of today, which was 426.69-ish, and then ultimately a rejection around 427 and 427.50. Now tomorrow, if we continue to go up higher, but with very little volume, I expect the trend to keep on going higher until we hit the next critical level of resistance around 428.50, and then we will see that ultimate move lower. And the reason why I say that is that as we're going up, I'm going to expect my 10 SMA, this red line here, and the 21 SMA to move lower. And as they're going lower, that means the candlesticks are going to be magnetized by these SMAs, and that's what I teach my students. That candlesticks can be magnetized by these SMAs, and so as they're getting pulled in towards these 10 and 20 momentum SMAs, the SMAs, especially the 21 SMA, I expect it to be around the 428-ish price level, and that's where we can see a convergence of the price rejecting both the 428 level or the 428.50ish level with the 21 SMA momentum SMA here. And so that's kind of my thoughts for this week. But you guys have to remember though, we are in earnings week. All right. So if you have like the big names like Netflix and Snapchat and other, for example, airlines names as well, if they have very, very good numbers, the market can bounce a lot bigger than you would expect it to be bouncing. So you guys have to watch out for the earnings as well. But yeah, so that's it for the market review for this week and what I'm expecting for the rest of the week. Let's kind of go over the names that I've given my subscribers yesterday as well. So this is TSM. This name has been on the watch list multiple times, and today I told them yesterday that I am expecting the very first support, major area support around $113.20-ish cents or even $113 as a whole number. Um, and I said that if we bounce on top of here, this can be a start of a long term position. However, I would want to see a more decrease in price and eventually hitting this very, very even more significant level around $107.50 or even $108 if you guys want to round up. And if you're able to go down here, this would be even a better confirmation that we can potentially start a long-term position on this great name. And I've given my subscribers the reason why this thing is a very great name to be invested into. But if you guys want to see that, you guys will need to subscribe for only $15 per month. I mean, that's a great steal, to be honest, and it's a great deal as well. All right. So, that's pretty much it for TSM. As you guys can see today, we actually bounced to a T at $113.23, which is the low of the day, which is literally 3 cents off of what I was talking about here. And we ended up on a nice price here around $115.35. Now, all I need to see for a nice push up, a nice uptrend to start again as a nice gap up, all right, and a hold of this $116.20 level, which is what happened previously here. Okay, I want something like this to happen here, right here. Okay, so I want this to kind of have a similar pattern right over here. Okay, because price tends to follow history. All right, previous history. All right, now the second name was Airbnb. And Airbnb was a similar case to TSM. I showed them that what I was looking at. We have a nice demand area or zone, a support area here around 129 to 132-ish or 133-ish. And that's also a pretty close area to the IPO's lows here, IPO lows. And during the IPO lows, we saw a lot of buying happen in this range here. And so there should still be a lot of buyers who are still invested into this name. Okay, a lot of big money buyers here. And so if we were to break below the support, all the people who got in here during the IPO lows and all the people who decide to play this bounce here for a potential double bounce, which actually turned out to be a nice double bounce play here, um, are going to get out, which means the price is going to flush downwards. And I even said that it can potentially be below 100. Now, I also did mention that this name is also a little bit oversold. If I look up the RSI, the RSI is around 32. And so if I want to see a little bit more oversold conditions, I want the RSI value, this metric, to be showing me that the value to be around, at least below or at 20-ish. Okay, for the RSI. Now, obviously, I am still a bit bullish on this name, and I also given the reason why. I've given my subscribers the fundamental reasons why. I've given them the fundamental metrics, the values, and etc., and what I personally think about those fundamental values. But you guys will need to subscribe to see why I am a little bit biased to the long side as well. Now, today, you guys can see that we actually pushed lower into the zone here, but right away we saw some buyers come in, and we had an overall, about a million and over volume than the average volume on the daily time frame. As you guys can see on the left side here, we see that the volume was around 7.2 today, and then the average volume is around 6.8. So I actually would have wanted to see a nice bullish candlestick with a nice big real body here. But unfortunately, that didn't happen, and we did not sustain those gains here that was made intraday. However, this can potentially be a weird morning star doji. All right. And so if we, somehow see a big gap up tomorrow morning, or at least a little gap up from the closing price of today, which is around $131.88. And if we have a close above this today's high, which was $133.77, we could potentially come back above 140s. However, we have a very, very big area of resistance around $138. So that's going to be our first hard resistance that we need to overtake. All right. The next name was Zoom. Okay. So Zoom is more of a fundamental play to me. And I've given you all the subscribers, if you guys are watching this as well, um, the reasons why I'm also biased to the long side and a little bit to the bearish side as well. But today, I explained this on yesterday as well on Sunday that I want to see if the price keeps on going lower here from this point forward. Since I was already long here, um, I want to see this support around 345 to 348 ish. I believe I didn't say that yesterday, so my apologies for that. But I want to see this support hold, and today we indeed saw that. As you guys can see, we also saw a convergence of the daily 50 SMA here hold as well. Now, this is also a hammer candlestick here. So we can very much see a nice reversal and possibly um, hit another major area of resistance around 370 and ultimately around 380-ish. Okay. However, like I said, with the market kind of starting its this downtrend movement, and also with this Delta variant of COVID kind of surging the COVID levels again, COVID infections again, I believe there's going to be a lot more usage for Zoom uh, years down the line here. All right, now we have gold. So gold is something that I actually kind of briefly went over yesterday. So gold is an inflation play here as the dollar loses more of its value as the inflation rises year over year. I believe it's 5.4% year over year since the month of June and from last year of June. Um, and that's surprisingly not good, obviously, since we also beat the expected number of inflation, which is never good. And I believe we beat it by 0.40%. If I'm wrong about that, I apologize. But gold is one of those safe havens, the commodities that a lot of people want to park their money in, especially when inflation rises, creating a loss of value in the US dollar. Now, yesterday I drew this line here saying that I want to see this 200 SMA and eventually the 50 SMA to kind of go down, right, and kind of swoop below the candlesticks and act as a support again. And that's exactly what these 10 and 21 SMAs have been currently doing. So they go down, they swoop lower and lower and lower, and as the price rises up higher, the SMAs, these momentum SMAs, 10 and 21, are able to start supporting the price movement upwards, and then they start to curve upwards to support the price towards the upside. Now, we also saw this golden cross here happen here after this death cross that happened back in February of 2021. But I do want this golden cross to stay and not for this 50 SMA to dip below the 200 SMA once again. So I need to see the price break up above 170 and eventually above 172. Now, if you guys can't see this, but gold is on a huge 10-year cup and handle formation here. And if you guys know what a cup and handle formation is, please go over and head over to my website and get the beginner's trading guide. All right, it's a very, very fundamental book that you guys need to have in order to get all the basics down. All right, but we see this big 10-year cup and handle forming on gold. And so, and here's the handle right here. And this very bullish chart pattern can very much break up above, and eventually we can see a nice break of all-time highs on gold. So this I guess you say neckline resistance here on this cup and handle formation can eventually break up to the upside. All right, the next name was PLTR. So this is also a name that I'm biased to alongside. Just as a company, it's a very nice company to be invested in into the long term. Um, I am personally holding option leaps, but I'm planning to also get some equity as well. But however, I did mention yesterday that I want to see this 21 area hold. And what did it do today? We actually held. And I also showed my subscribers that I want to see a possible formation of this ascending support trend line happen here. And it seems like we could potentially see that happening. And I also explained to them that I would want to see this type of movement here where we move up and up again and maybe hit another level of major resistance around 27.50, come back down again, and then have another retest of this ascending support trend line, and then have an absolute monster support bounce. Okay, so this is something that I kind of want to see happen here. Now, obviously, whatever I'm saying, don't take it too seriously, because obviously the market can do whatever it wants. But PLTR is a very solid name to be honest here, and anything below $20 would be a steal for this name. All right, laser. So laser was also another name here that I was looking at, and the reason why laser was on my radar is that big money, so big funds and institutional money have been buying up this name a lot. Just a few, I would say, around last month, um, there has been I believe, 25.8K% change in how much shares they're buying on this name. That's huge, right? And I believe that's around it was around 2.2 plus million shares that are being bought. And that's very big compared to what they're buying on this name last month, which is around a couple tens of thousands, or 10,000, excuse me. So this name has gotten on my radar here, as well as this name is potentially a very a good company to be having your portfolios for the next few decades, because there's a lidar system and technology here for future automated cars. So now with laser, what I told yesterday to my subscribers on a technical analysis standpoint here was that I wanted to see either a bounce at 17.60, make it into a new kind of a double bottom here, but more highly likely bounce that will be sufficient enough for the price to start going to the upside again will be $16 here. All right, which would also make another double bounce. But if we can't hold $16 here, there isn't much support from this previous big buying that happened back in November 2020. All right. And so all the buyers who are in here would eventually have to get out as this crucial area of support is lost. And so there should be a huge, big dump if we break $16 here. So keep an eye on that and make sure you guys have your alerts set. But today I saw some great movement, even though I didn't see a lot of good volume here. But this is a nice big hammer candlestick here to the upside. And so we can potentially see another gap up here into the 18s and maybe go back up to 18 point around 70-ish, 18.70 cents or even 0.60 cents here. And ideally, I would love to see it go up to $19 in the next few days. But obviously, the market can do whatever it wants. All right, so that was it for all the names. If you guys have any questions, please hit me up on Instagram or leave a comment below, and I would gladly answer your questions. All right, I will see you guys on the next video.